What is going on in the capital markets? That's a question I'm excited to discuss with my colleague, Michael Anderson-Mitterling. Mike is a SVP, a team leader, a former Olympian, and has now lived through multiple economic crises and recoveries. So today, Mike, we're just over 2 months into the government mandated shelter in place ordinances in response to COVID-19. The real estate markets have gone through multiple phases of kind of evaluation and figuring out the next steps of how they're going to approach the next few years in the real estate industry. With that, as we approach June, about half of the market, the United States market, is opening up for business. We're seeing economies like Texas go full on, while California is still in a significant pause period with an indefinite shelter in place mandate. With that, I think it's important to understand how capital flows, especially in the real estate market. And could you give me just kind of a high level overview of what is going on in the real estate capital markets?
Absolutely. First of all, thank you and thank you to GSP for providing this platform. If we were doing this, a month ago, it would be a very different conversation than we are today. It continues to be a very fluid situation. But what we are seeing is that the capital markets are thawing. We are seeing more opportunities, and we are seeing capital come back into the market that was once 100% on hold.
Mhm.
We are seeing less growth in underwriting. While there is distress in the system, there is capital to do a deal depending on the risk profile that you are comfortable with. So I would say we are getting into a better place than we were 2 months ago.
Okay, yeah, that's interesting, and largely I agree. One thing that's important to understand, though, from our client's perspective, is who's still active today. Which type of capital providers and lenders are active today and approaching the market kind of full on?
Correct. Yes. A month ago, 2 months ago, we saw a complete freeze in the secondary markets and the bond markets, which took a lot of liquidity out of the system. So CLO, CMBS have, are still on hold or very, very slow to be coming back. As a result of that, we have seen other capital come to the market to kind of fill that void. As a result of that, we've seen pricing widen, we've seen leverage come in, as there's now been less liquidity and less competition in the market. That capital that has filled the void ranges from bank execution, live company execution, unlevered debt funds, equity funds, and most importantly, the agencies
Yeah.
have come back into the market full force. However, with more structure, they're providing much needed liquidity into the system and providing at least clarity for lenders, for borrowers, that there is the potential takeouts. So now we can effectuate the underwriting accordingly and start making decisions.
Yeah, I agree. And I think one thing that you alluded to there is, with especially the agencies stepping up, there is kind of a full spectrum of capital that does exist and has stepped up to fill the gap, as you mentioned. So you can get kind of pretty much all aspects of a deal done, from kind of land all the way to permanent takeout financing. Um, it may be more selective now, but it's definitely possible. So with that, you mentioned that underwriting standards have changed. Can you kind of explain how some of those changes have taken place and what they are?
Correct. And what this situation has provided is insight and a sense of cautiousness, across the boards, and the ripple effects that happen when unemployment skyrockets, consumers not spending capital, and the really, let's call it the base of it, availability to pay rent, which inevitably caused, freeze within the capital markets. Today, as a solution to that, and for the agencies and HUD, to provide liquidity back into the system, what we have seen is a higher DSCR underwriting from 120 to 130, thusly creating a gap in there, to provide for an economic vacancy. We have seen 6 to 12 months of reserves. And what this means is that the lenders are holding back principal and interest reserves, taxes, and insurance to pay the loan current over this period of uncertainty.
Hmm.
So we are seeing lower proceeds.
Yeah.
We are seeing more conservative underwriting. However, we are also seeing very aggressive interest rates as a result. So while we could have seen a much greater reduction in proceeds, we're seeing a 5 to 10% reduction versus a 15 to 20% reduction, which is providing certainty of execution for bridge lenders, for borrowers, knowing that if I'm executing a business plan, I've got to take out within, the multifamily sector per se, and that provides a level of certainty. However, it's not your 120 DSCR and it's not your 80% LTV. So there is going to be more equity into the deals, and I think it's very important to be realistic with what that capital looks like.
Yeah, I think that's an important thing to understand here, which you mentioned, is that right now it's considered less proceeds, right? With the 120 to kind of 130 change, especially in the multifamily sector. And the question, which we can't answer today because I think it's yet to be seen, is how that impacts cap rates going forward. So that's going to be a thing that I'm going to be watching over the next little bit. With all of this, thing that I like to do during times of uncertainty and transition is I like to reach out to people that are more knowledgeable about leadership, economics, different facets of business. And so who's one person that you'd really like to sit down and speak with for kind of an hour to discuss what's going on in the world today?
Yes, and gonna go a little bit off script here, and kind of back to my past. Ben Ainsley,
Okay.
probably the most successful Olympian within sailing, and also the head of the British syndication for the America's Cup. This is his third at this point in time. But what I'd be very interested in to kind of sit down with him is understanding how you're running a multinational uh, a corporation in today's time with a very end objective and a very definitive timeline, and how are you navigating the risks associated with COVID, individuals perceptions of the risk, and really dealing with governments and movement and financials. It's a 300 to 400 million dollar endeavor. So and the budget accordingly, and how these situations have caused delays, and managing the risk with the solutions accordingly, and within a definitive time frame. So
Yeah, I think that would be very interesting, especially knowing your background as a former Olympian in sailing and especially now leading your own team. So with that, Mike, how can people get a hold of you? What's the best way for them to reach out to you?
definitely feel free to email me at manderson@gspartners.com, and I am here to help.
All right, fantastic. Thank you, Mike, for discussing what's going on with the capital markets. I'm Paul Monsen at GSP, a VP, and we're excited to have this platform in addition to our Finance Fridays, the information we're putting out through FinFacts, and all of the other ways that we're communicating with our clients. If you'd like to reach out, please do so, and we will try to answer any questions that you have.